Good evening, folks. Today's April 24th, 2018. Today is 8:41 p.m. Eastern Time, and just a real, quick recap this week. I posted in our private chat, that I kind of anticipated the dollar strength to open the market based on, what happened last Friday with the headline news regarding North Korea suspending, their nuclear test. On Sunday, I kind of posted in the market open where we saw the dollar jumped, that we could potentially see, some dollar strength, and particularly in the safe haven currencies. As we all know, those currencies tend to weaken in a risk-on environment. And why would I think that the market would be in a risk-on environment is simply because the market would see that headline news that came out late Friday as positive. It would ease fear and tensions, globally. So that was pretty easy to kind of anticipate, looking back and I was reading, I kind of made a mistake, in the actual text, in terms of saying, if aggressive, you go ahead and you wait for the pullback to 107.60, I believe. But in all reality, that's not what I really meant. I meant if you're going to be aggressive, get in that market, which at the time was probably, 20 pips above that, 107.80, I believe. So that's what I meant. If you was aggressive, get in now at market. If you're not aggressive, then you would want to wait for the actual, pullback to the 106, which it was like probably 5 pips off, that particular, entry level. So, I went to sleep, didn't get up. The European session slept through it. It was nothing potentially, market moving at that particular time. So, when I got up Monday morning, New York session, it was already, probably a few pips. Could have still got in, but, I don't like to chase trades. So at that, particular time, I just waited to, wait it out. So, so that's kind of what happened with the dollar. I got in to sell Aussie dollar at 9:30 on Monday, and as you can see, with anticipating that the Aussie could weaken, even though we had a mixed, print, was nothing significant for me to say, to go ahead and, sell the Aussie, but, with my fundamental background in market sentiment and knowledge and experience, I kind of felt like it wasn't nothing such, positive enough to where, the Aussie could just, really strengthen and sustain that move. So, so it was kind of more so, I would get in and, I'll, have a little stop above, 76 level. And as you can see, it came up and, barely got to my stop and kind of stopped me out. And as you can see, where it's heading again, it's heading south. So my initial target was actually 76, which is 75, which is somewhere, well, right around this support level that I'm seeing here on the charts. I still believe that it could. But as you can see, doji here, indecision candle. So, we're going to wait. I think that, with the markets kind of focusing in on, what's happening with the 10-year yield, if that, pierces the 3.0 level, we could definitely see, the dollar strengthen. So it's right around that level right now, psychological level. So if we get a pop through and a retest, then, that's probably signaling dollar strength. If we get a resistance, bearish candle heading back south, then that would definitely give us a hint that, we'll probably see some dollar weakness. So at this particular time, I had a few reasons why I got in short yen trade. Wasn't looking to hold it into the actual event on Thursday. I was just looking based on what's been happening at that particular time in the market, where we saw U.S. equities, took a nosedive towards the latter part of the New York session. We had, gold. Ticking up at that particular time, and we saw some resistance. Back up at the weekly, resistance levels here as it's approaching it again. Which kind of led me to that sell the dollar, so to speak. So we'll see what happens. My stop is above this high right here. So clearly, if it gets above this high, I would want to get out the trade anyways. So right now you're seeing that it's kind of at the level where in that zone where I would look to sell. I'm already in it, so no point in me selling again. This is just the zone. From here on out, we'll be watching. There's quite a few resistance. It has to kind of pop through. Which we're looking at. First this pullback. First we're seeing. Some divergence kicking in where price, is going higher, and you kind of see the MACD. Heading lower. So, I'm kind of anticipating, that we could potentially see, some resistance hold, and we get, more so like a push, back lower down to, these particular levels. So I'm kind of looking for something like this, potentially hold as resistance, pop to either support here or, back down to the 108 level here before we start moving, back up higher. So that's kind of what I'm kind of anticipating. We'll have to see. And it's a couple of things that we need to focus on and able to, kind of see if that's going to hold true. And so we're going to focus on the dollar index. If we get this to continue to hold, at this particular level, then, that would, along with the 10-year note, that would help us, kind of gauge, the dollar, potential dollar weakness. So, that was my reason why I got in that short trade. Like I said, wasn't looking to hold it into the event on Thursday. But so we'll kind of see. I'm keeping an eye on 108.50, 108 in terms of taking profits. If we get some dollar weakness here. So we'll kind of monitor that. So let's just go back to the actual economic calendar. So as you can see, Monday was pretty light. Other than the CPI we had that came out. Tuesday's pretty light. We have a bank holiday for New Zealand and Aussie, so we're probably not going to see much movements out of those currencies, or market, I should say. Wednesday again, it's pretty light. These are the time, you take kind of analyze the market, see what's going on in the market. Don't try to force any trades. If you do get in a trade, probably minimize your risk or how much you're risking on that particular trade. And I try to focus every week on main events, and that's kind of where the bulk of my attention goes. And at this particular event on Thursday, I'm actually trading out of this event. I'm not, my bias would be bearish, dovish, ECB, but I'm not as confident. My conviction is not as high, so I would probably want to wait to see what language, or what statement comes out of this for me to actually trade this particular event. And my bias is also dovish, bearish on the Bank of Japan policy. So that's one of the reasons why I wasn't planning to hold, this particular pair, dollar yen for too long. I was at least anticipating a pullback for markets to get back in at a better price, anywhere between 108.50, 108, preferably 108. So that's what I was hoping to see. So we'll see, but I would definitely try to probably lock in some profits or reduce risk as soon as my rules and strategy tell me to. Um, so moving forward to I mean that's basically it for this week. Other than these two main events, we could probably pay attention to Bank of Canada. Pelosi, he's speaking. He's due to testify. Um, not sure if this will be a market mover, but if you take a look at the oil market, I think he had came off his highs. Yep, came off his highs. So you know, so right now, what you're seeing in the market is, in my opinion, it's just not necessarily much going on in terms of any kind of sustained moves in terms of trading. And these are the moments where, you just kick back, you stay on the sidelines, you analyze, you watch, you go with your family, go play with your kids or, do something else, go work out, things like that. So when you actually see that it's kind of quiet, I'm not saying much, it's because there's not really much going on for me to actually, get some action. And as you could tell by now, I like to trade around these major events or trade into these major events. So you won't just, see me lurking, just, glued to the computer screens and watching every tick and every move, because I like to trade with some kind of catalyst, that's moving price, that's behind some kind of movement. Like we had one on Sunday when the market opened up. The catalyst was what happened on Friday, the headline news, and we saw at least a good from I would say from probably about 107 about 107 probably 107.70 probably the market opened up, and it's been running since. So we're looking at somewhere down here, market gapped right here. So we opened right here and it came all the way back down, like I said, to 107, basically 66, 65. My entry was 60, so I was just a few pips away, and I'd have been able to, catch, not necessarily this entire move, but I'll be able to catch, at least from 107.60 to 108.60. I mean, that's the 100 pips right there. So let's just say max probably 100 pips out of this move. So that's kind of how I trade, and that's kind of how you guys know me to kind of approach the market as well. So so I'm looking for possibly a pullback to the 20-day moving average, or back to the weekly resistance too. So anywhere between 108.50 and 108. Could probably potentially give us, a nice buyback opportunity, going into that Bank of Japan monetary policy. So as you can see, the 50% lines up right in line with the actual 108. So, like I said, and also the 38 is kind of right below the weekly resistance too. So, this is the level, if price were to pull back, this is just a level I'll probably look to, for market to react back into a potential buy. So that's kind of where we're at with that particular. As you can see, it's showing overbought at this particular time. So, we could, possibly see, a pushback lower, just for markets to probably buy it back. So that's kind of where I was, anticipating, anyways. So we'll see what happens. We'll just see. Right now, the market, Asian market, is probably going to be a little bit flat because we have two major, New Zealand and Australian dollars kind of, on a bank holiday. So we don't see much out of that particular currency. This is actually a currency that I'm watching, Aussie. New Zealand. I like it long Aussie New Zealand. So let me go to that chart and pull it up real quick. Um, so kind of two ways I'm looking to trade this. I would prefer a pullback. Um, as you all know, um, I like pullbacks. You get a better, bang for your buck, so to speak. Um, you get a better bang for your buck. But what's happening here? Okay, so let's just go to the charts. So I would prefer, I prefer a pullback. I prefer a pullback anywhere back down to the 106 level, 106.22. Obviously, we're at 106.81 right now. So, if that doesn't happen, I'll probably look to be more aggressive on this particular trade, and either one or two things. Lost connection. So one or two things. I'll probably look for a pullback. Back into the 106.50, 106.60 area, which would be right here. On a more aggressive trade. So I'll look for a pullback back into this level here for me to go, long, or probably a break above the 107 level. Targeting probably 108, so to speak. So no, that's something I'm actually paying attention to. If you look on a bigger chart, you can see that it's been taking a beating. Ours have been taking a beating. If you kind of draw a channel, kind of see where it's at right now. So yeah, it'll be good to get a pullback. Exactly kind of what I drew on the last on my MT4. A pullback to the 106.50, 106.60 level, which is kind of where we're seeing this little dotted green line. So that probably gives us a good opportunity for a push higher. And I do this in the opposite direction. So if I were looking to sell this particular pair, a pullback to the 38, which would be, like I said earlier, the 108, and the 109 level will probably be good take profit. So anywhere in this level will be good. So anywhere we get in, anywhere from 106.50 to or 106.60, and we could look, anywhere between 108 to 109, take profit zone. So anywhere off in this zone, we could probably, look to potentially, see price give us some kind of reaction, and we will be able to, at least get a nice, 100, 120, 30 pips out of this particular trade. So that's and this right here would kind of take away any kind of market risk. It's two potential risk-on currencies. So even if the market is in probably a risk-off environment where, the yen, the Swiss, and the euro, potentially strengthen, or maybe even the dollar, if the dollar is, playing that safe haven flow. Trading the Aussie, New Zealand, it would be more so on, what's going on specifically with those economy. And right now, I think the Australian economy is, in terms of what's happening, probably a little bit more stronger. Better, economic data has been coming out, than the New Zealand economy. So, that's kind of what it would, take away, a lot of risk out of, what's happening in the market. So that's a trade I'm looking at as well. Other than that, the other trade that I mentioned is on Thursday. So, like I said, we're going to have weeks like this where, we may have one or two trades or we may have no trades. So that's just kind of how it goes. So we'll take a look at this and kind of see what the market is doing and kind of take it from there. Looking at the commodities complex right now, we're seeing oil market kind of mixed at the moment. Um, Looking at base metals, they're closed. With Aussie and New Zealand, it's 9 o'clock. So yeah. All right, folks. Well, we're gonna stay tuned, stay in the markets, and we'll definitely if opportunities come, then I'll definitely post and give you my rationale. All right, I'll talk to you guys later. Bye.